The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Wonderful to be back in the USA, boys and girls. The most important part of flying is when you leave and when you come home. And believe me, when you travel abroad and you walk in to San Francisco International Airport and it says, "Welcome to the United States of America," it gives you a good feeling. Folks, I can tell you this, after being away for a couple of weeks, 6 weeks, there is a unanimous, well, I shouldn't say unanimous, well over 50% of the people of the world really are against our president. I mean, they have views that absolutely astound me. It's really amazing. But what they hear and what I hear and see, I guess, is totally different. But I'm going to get off my soapbox now because we got a couple of really interesting markets that we've been talking about for quite some time that have been hit really hard this week. Crude oil and the Treasury bonds, as you know, both of those have taken really big hits. Let's just start out with the crude oil because we have a really strong interest in this one here for quite some time. If you'll take a look at this, this is what we were looking at last week. Of course, this is this week's action. You'll see that it's been updated here. But my flight coming back was actually worse than the flight going out, Russ. We had a terrible flight going in, 21 hours. We were in a storm. But coming back, you always have a tailwind. So the flight back is only 10 hours, 16 going over, 10 hours come back because you got this huge tailwind. But unfortunately, the tailwind was turned into a headwind, and we came through some really, really rough time coming back. And it was rough. But luckily, being the tough dude that I am, and with enough medication, I was able to make it through. By the way, if you ever fly, go to Jodie Foster's website and learn how to take the Jodie Foster cocktail. You take 1 Xanax and 2 glasses of wine, and you'll wake up for breakfast. Works every time. Yeah, it's the secret to flying, Danny, is you have to have as many good landings as you do takeoffs. That's the whole secret to it. Yeah, double shot of tequila will do the same thing. Anyway, folks, we've broken down badly in crude oil. We're coming into some very, very interesting support here, and I'd like to show you. The news now is so very bearish. I mean, even the people on CNBC know that it's bearish. So we have to keep an eye out on that. But let me just give you an idea of what's going on here on some of these markets as far as support and resistance. And I'm trying to find, this is the one I wanted to show you. Here's the one that I put in. This is up to date. I updated this morning just to see where we were. But if you'll take a look at this, this is the heating oil chart. Now, this is interesting for several different reasons because we can take this type of information and move it over to what we had in Treasury bonds because we're going to see the same type of a pattern, but the trend is a whole lot different. Now, when you're looking at the heating oil here, you'll notice from July to November, there's a really nice 77-day cycle there. That ends today on March the 10th. And as you can see, we came down this morning, yesterday, and we hit the exact 61% retracement, absolutely spot on. And, that's the main thing that, my alarm is going off. My burglar alarm is going off. What the heck is going on here? Well, better grab the 357 Magnum and just keep on going. Anyway, this has got several factors here. We're down now for 3 months since January, and we're coming into a perfect 61% retracement with the whole world bearish. So my assumption is we're getting ready to rally in crude oil and in heating oil, just on this particular technical basis at all. However, remember that if we go through this level on heating oil, we're looking at something really, really serious. Now, crude oil has pretty much the same pattern. This is the one that was I posted just the other day when I was still in Hong Kong. We haven't quite updated it yet because, once it broke this, we were expecting the market to come down, a great deal lower, and that would make it a lot easier. So we'll see if that's going to make any difference or not, but we'll hope we'll be able to see. You folks here have a pretty good idea of good senses of humor. Okay, let's take one other look before we get to the Treasury bonds, because this is the one that everybody all here at TFNN always has an interest in. And this is the gold market. This is the one we posted last week. And I've updated it. Let me get it up here so we can take a quick look at it here. You got a lot of comedians in there. As you'll see, the gold went right down to that 1.618. That number came in at 1196. We hit 1194 this morning. So anything below 1194 would be pretty bearish. Folks, I don't know if you're following all of the other commodities. I don't know if you listen to Andy or Steve or any, but most of these commodities are stand by, folks. I have to do something. My alarm is going. Just give me 1 minute, please. Hold on. Wow. No, it's nothing. It needs a battery. Evidently, we've been gone for so long. It just needs a battery. It looks like that. You said call the police. Yeah, I don't know if you heard that. This is an actual story. They were robbing a guy down in Tennessee, robbing him in his house, and he called the police and he says, "We'll be there in 20 minutes." So the guy called back and he said, "Forget that call." He said the robbers were here. I shot them both, and the police were there within 2 minutes. Makes good sense. Anyway, no, the only time you'd ever want to do that is if you were protecting yourself, and that's it. Folks, I am suffering from major jet lag, so don't hold me responsible for anything that I'm saying this morning, okay? I didn't get here to Tucson till 11 o'clock last night. It was like 23 hours. The plane was delayed in San Francisco to Tucson for 6 hours, and by the time I got here, it was 1:30 in the morning. All right, let's get back to some of these other things that we need to talk about. Let's get to the Treasury bonds, folks, because that's the market that is going to be the one that's probably going to be getting the most news here. We've talked about this several times, the fact how bearish it's been, and I just wanted to go over it with you again. And I posted it, and I brought it up, and bada bing, bada boom, what did I do with it? Oh, shucks, because I wanted to relate it to the crude oil and everything else, and I think this is it. Maybe this is it. Yes, this is good enough here. Hold on. I've updated it as of this morning. Hold on here 1 second, and we'll get it up here. All righty. There we go. This is the long-term chart on T-bonds. As you see that same cycle that we're looking, it's almost the exact same cycle we have in crude oil. This is weekly. The heating oil is daily. Oh boy. 10-4, Billy Ray. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to keep looking at this long-term weekly bond chart for a couple of different reasons. The primary reason is the fact that it's so important to the financial markets. It's one of the most bonds and notes are the most highly traded of any of the commodities by far, so they're very important. The notes are 6 times bigger than the bonds because they're short-term paper. The charts pretty much, I shouldn't say they look pretty much the same. Don't hold me to that one. I'll check that on the break and bring it up to take a look at it. But the bond chart has broken below the 61% retracement. What's interesting about this, folks, is this thing has been rallying for several months and not been able to rally more than 5 handles. The last time we had a move like this, it rallied 15 points. So this is a very, very shallow rally. Not only that, but we had lower highs in the rally, which is very, very bearish. So what I would expect now is if this is in a really big breakdown, we're not going to get a much above the that 149 level. That would be my guess. In other words, about a 3-point rally would be all you would get, because this is what I think a major break of a fib point and a cycle. We broke that 76-week cycle relatively easily. But we are oversold. I mean, there's no question about it. This thing has been, it's been, weaker than Hector's pup for a long time. So I'm expecting that, it's probably going to continue that. But we are very, very oversold. So short term, we could certainly, get a good rally. And the same thing is true of crude oil. We've been down, quite a bit in crude oil for quite some time now. In fact, that was one of the things that I focused on while I was, giving the live seminar over in Hong Kong, is because what we do is we try to guarantee the folks of what we're looking at when we're trading. In other words, I had to put these trades on, and they have to work, because if they don't make money after the end of the time, they get very, very upset. And you don't like to have upset campers. When you're trading in a foreign country, you have a hard time getting out. Now let's take a quick look here. This is what we were doing. We were breaking down here, as you can see, from the 6th. That was on Monday. We had that little ABCD pattern. That one worked well. We had another 382 rallies. So that was a really big winner for us. We also had the euro, and then we bought the euro yesterday at the 61% retracement. It went down and touched the 78. Went against us about 28 pips and then turned and made about 80 pips. So that's good. Now, getting back, since we're talking just a little bit about the euro has made a very interesting pattern here, folks. We've gone up here for the third time at this 106.40 level. So it's very important that we knock this out to the upside today, being on a Friday. If it's going to be a really valid breakout here in the euro, I would expect to close somewhere about that 106.70 or possibly even 107 if it's a really good breakout. Now, if this is it and we don't get any higher than where we've been now, then that's the interesting one to really take a look at. So that's another one that I think looks interesting. Okay, the other one that I think we'll take a quick look at, this was the last one. This was the last trade for the week. What we're looking at here, these are all short-term trades, by the way, folks. This was scalping. We'll be scalping. These were not ones that you would get if you were in the service. And the reason why they were shorter term trades, I don't like to do things for half hour or 15-minute unless I can control it better, and I'm not able to control it. I mean, there's only so many hours in a day. I work 8 over there and 8 over there. I sleep 2, so that doesn't give me time. But what we were looking for today was to sell the S&P if we got it up here at that 2381 level in the March, but we have to switch over to the June, because that's the one that March is going to be coming off the board pretty soon. But this is the pattern that we're looking at. You'll see on March the 3rd, that was our pattern that we sold that ABCD up at that 2380. That made 30 handles. That one in the bonds made up a great deal of the move. But when you're trading, live or for a shorter period of time, you have to be really flexible, and that's the whole key to what we're trying to do. Now, this weekend, I've got to catch up a lot of things because we've had so many big moves in commodities, folks. We've had breakdowns in beans, breakdowns in oil. Corn is starting to break. Sugar has totally come unglued to the downside, as has some of the other. We focused on cotton last week for a little bit. That's off more than a nickel from the high, which is quite a bit. Crude oil is under the gun. These are all deflationary things, folks. I don't know if it's going to continue like that, but those are deflationary things, because these are the commodities that stimulate all this other stuff. So I don't know what it all means, but we'll try to put it together the best we can. Let's see. What other questions someone else had that I wanted to answer before I get on to the next one? And what was it about? You know what it was? I think it was this one. Nope, that wasn't it. Let's just try to find it. Yeah. Can't find it. That's the bad part. Oh, here it is. This is the one in crude oil. Just wanted to show you the same type of pattern. What I was trying to do was to show you that these markets, try to trend, is what we were looking for, was to see these little Gartley patterns. As you can see here on the 7th, which was Tuesday, we had a really nice little Gartley up there at that 5380 level. In fact, we were talking about it on the air while I was here to see that. We've got thanks, Marshall, for reminding me. I could look out this morning and I could see how bright the moon still was at 4 o'clock. I haven't been to bed yet. I mean, it's been I got major jet lag, but I'm not tired. I'm just acting stupid. But wow, how's that different than normal? Well, I guess I am normal. Anyway, we do have a full moon coming in here on the 10th, so that should give us some more pretty good volatility here looking at this. But the bigger one, it comes out to the end of the month, I believe, when we have the new moon, and that's pretty much what we're watching. This is a pretty big date from Norm Winsky's stuff. As you know, we had Norm on the air a couple of days ago, and we're going to have Bill Meridian hopefully next week. I'm going to get in touch with Bill over the weekend, and we'll be able to have him on the air too, because he's He was wrong in February, but boy, he's certainly been right for quite a while. Would love to have him back again. I wanted to show you this euro because this is the one that's really ready to break to the upside, folks. It's really got a chance. This is the opposite, of course, of the U.S. dollar that's hanging there at the 61% retracement. But you can see we went up to this 106.40 and change. We took out the highs from the 28th. We took out the highs of the 6th. We didn't go anywhere yet. And look what happened on the 6th when we didn't go anywhere. We broke over 100 pips. And 100 pips is quite a bit. There was a trade that we were doing. You see that 3-drive pattern that we have with a Gartley perfect ABCD? We bought it there with a stop below the 78% level. It went down and kissed the 78% level and then proceeded to go up to 40, made over $900 in a day trade. So, they don't always work like that, but sometimes you get lucky. But these are shorter term, folks. These are 15-minute charts that you can make your living on. But, it's really hard unless you have a Twitter account, and that ain't never going to see in my future. So we'll see how this works. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've had a request from our good friend Danny in Atlanta to take a look at this dollar-yen As you can see here, this is a shorter term chart, of course, but it covers quite a few days. You can notice that it's made that big blue line, the Thunderbolt line, is the ABCD pattern. You'll notice how it went up exactly to the 1.618 level. Since that time, it's backed off only about 40 pips, it's nothing. That's like $400 in the end. Really, not very much. But that's one that you want to watch, because if that can get above 116, it could really start to fly. It's got a lot of thrust behind it. The fact that it made that ABCD at the 1.618 expansion usually means that you're going to get a pretty good correction, but it also means that if it gets through there, that's the main thing to look at. The key for me is watching the euro. We've made 3 higher highs now, only by a few pips over the last 3.5 weeks. The last one was, of course, this morning when we hit the 106.52. We're trading at 106.30 right now. We took out that high. There was no buying there at all. The few buy stops that were there were filled within a tick or two of where the stop prices would be. And then it's, little by little, it started to sell off. So until we go blasting above that, the euro is still what I think is in a longer-term downtrend, shorter-term uptrend. The U.S. dollar is the real key here. If we get this to close above 102.50 in the U.S. dollar, that means it would break out those highs. That means it would have to push the euro lower than the 105 level. And then you could start to see some really big things. And believe me, folks, the problem is not in the stock market. The problem is in the bond market. It's many, many times bigger than the stock market, and that's where the real problem lies. We've seen this over and over again now, in the Treasury bonds and the Treasury notes, and I forgot to check the Treasury notes, and we really need to do that. So since you're kind enough to listen to the old man babble this morning, give me a second while I pull up the notes. It only takes, in my case, it'll take a little bit more than a second. So we'll put this up. We'll put the weekly up here in the notes. And I think, see, the weekly and the notes are just a little bit better. Give me a second here to get this up here, because we did not take out the lows in the notes. That makes me think that we might have a chance here in the notes to have a little bit of a rally. Hold on one second till I get this up. It'll be here in just a heartbeat. There's the first part of the heartbeat. There's the second part. Get rid of this. Bada bing, bada boom. Now we'll be ready to go in just 1 second here. Hopefully. There it is. Boy, I got it on the first try. That's hard to believe. Okay, let's take a look at this note chart together, and I'll show you what I'm talking about. As you can see, over the last several years, we've gone down. We've almost touched the lows of where we were in 2013. We almost matched the lows of 2016. You can see that it was a little bit higher this time around. We've got that really wide. This is a weekly chart, so you see the last 2 weeks have had a real wide moves to the downside, but it's not near the lower end of the range here on Friday. And believe me, this market is incredibly bearish, folks. No matter how you look at it, this thing's going down, big time. But we've got the Federal Reserve in there doing their thing, and they most assuredly are most probably going to have a heck of a move to the to raise rates, and they've got to raise them more than once, because this quantitative easing has put the wrench in the economic theory, people's books. But that'll all be rectified, eventually. That's what you really want to be looking at. So that's the main thing that you would try to get, working in your favor, is to don't worry about what the Fed does, folks. They're always behind the curve. If you don't believe that, just Google back in 2007 and see what Bernanke was saying. He saw no really danger to the financial system, and we had one of the worst things ever happen. Go back to 2000. Was anybody there talking about a bubble of any kind, or an 85% drop in the Nasdaq? Of course not. So the news follows the trend, and the Federal Reserve is a private bank for bankers. You've got to remember that. It's not a U.S. organization, even though the office is right on Pennsylvania Avenue. That in itself is a smoke screen, but keep in mind that's what we're watching. I wanted to switch just a little bit here to the futures markets, just to show you, what's happened. Now, this isn't up to date, because I do this on Monday. This is from last week. I just want to give you an idea what's happening just on sugar. Just I know most of you don't trade sugar, but we're below $18 a pound now this week. We've had a 10% drop in sugar this week. If you look at the price of some of the other, look at copper. I think I have copper in here too. Here's another one here that we've been watching quite a bit, and it's very. Let me just you'll see what we've been watching for the price objective, because we're almost at the Gartley pattern right now. I think we're down around 257 right now. We're looking for it to bottom around the 255 level. I don't know where copper is trading right now, but that's what we were watching in the copper. Those are just a few. And if you look at wheat and corn and beans, they all have broken down, pretty badly. So that's the main thing. Now, wheat, corn, and beans will be affected by the equinox coming up next week. Actually, a week after next, on the 21st, 22nd is the spring equinox. And then we have I believe we have another eclipse due. My mind's not working right. I shouldn't say that. I know we have on the new moon, there's going to be a big cycle date that comes in on the 25th or 26th of March, which is right near the equinox, and that's the planning time. So this will be very interesting to see how that works. One of the questions someone's asked is about the full moons and new moons. Folks, the full moon comes at an exact time. As you can see here, Steve Rhodes posted it. It's 9:55 a.m. Eastern time on Sunday. And so it's a very, sometimes it's exactly on that time, but other times it could be a day before or day after. Usually have a 3-day orb. In other words, the day before, the day, and the day after is what you're looking at. The other question that someone's asked is about the gold. All I think you're going to get here in gold is about somewhere between about a $17 half of one harmonic rally here, because it could go a lot more because of the fact we're right at a major fib point and being down for a couple of weeks. But I still think we're going to get gold to get down to that larger fib point, down another $30-40, and then I think that's where you want to take a shot at it. And I tried this week. We got out of the gold at around the 1259 level, and then I tried it at the 1208 level for a couple of bucks, and I got out of it immediately because it either had to stop right there, or it was going to go below 1200, and it certainly has done that, and it's trading right near 1200 now, so not much is happening. So that's the main thing. The key to watch on this week's charts, in my opinion, is we need to watch the Dow Jones, where we're looking at some of these things. Now, the Dow Jones has done something. Let's just put this up, and I want to show you, because this week it did something that let me put this up here so we can see it. There's the Dow Jones daily. Now, we have filled the gap, folks. We have gone and we filled that gap that we had from the March 1st speech night. So that's a positive thing for the stock market. So 5 days down. Now, how much of a rally do we get? This is what we find out.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, we're back, and I wanted to talk a little bit more about the bonds and the notes. As I mentioned earlier, and as we saw in the charts, the notes have not taken out those lows from early December. That doesn't mean they're not going to today, but the Treasury bonds certainly have. In fact, they're trading about a point below those levels right now at 146.21. So no matter what the Federal Reserve does, the market longer term is going to be looking at higher interest rates. Whether that'll affect the market or not, remains to be seen. We've had quantitative easing for so long, it's thrown a wrench into normal economic theory. I personally am one of the very few people on this planet, I don't know who the other one is, they're probably up in Scarsdale at the mental health clinic, but it just doesn't make any sense. You give money away at a negative rate. Hello? Something's wrong with that, but no one else sees it, so what do I know? Another question someone's asked is about the crude oil market. Does it have a chance to rally? Of course it does. We're very, very oversold. They just saw the largest find that we've had in U.S. history. They found another wells up in Alaska that are going to yield about 120,000 barrels of light sweet crude, which is the best kind. That'll put extra pressure on the market. So, whether the market's already discounted that, somebody knew about this at least a week or two ago, and that's probably why they were selling crude oil when it got to $54 a barrel. So whether that means anything or not, I don't know. The key thing to watch this week, from my opinion, is just there's 3 things. Watch the euro, where we are above. If we can get that euro above 106.50, I think it's off to 106.70. I think it could be off to the races to 110, and that's in a bear market. It can rally to 110 and still be 100. Be very, very bearish. That would just put the dollar index, down to around the 97 level, down from 102 where we are now. That would be what I think would be very, very bullish. But these are a little bit longer term things that we're watching because of the potential for these breakouts. But, crude oil has not done that. The euro has not done that yet today. It touched those highs and took the highs out of the last month by, 7 pips. That's not what we call a breakout, I wouldn't think. And, the bonds have certainly broken down below the point. I mean, they've shattered the old lows. The notes haven't. So there's a little bit there. Now we have the Federal Reserve coming in next week, and most probably the markets will do the exact opposite. The Fed raises rates, and the bonds and the notes will probably rally just because they're oversold. The final and third thing to look at is the chart that I posted just a few minutes ago, and that's the Dow Jones daily chart. We have filled the first gap. And if we close at the lower end of the range today, and this is a Friday, and that means we close down about 70 points, and then we should gap down hard on Monday of more than 100 points, then you would leave a possible island gap on the second weekly gap. But the odds of that happening are like the Chance brothers riding over the sunset, slim and none. So we won't look for that unless it possibly happens. Now, the one other thing that someone's asked is about the British pound. The British pound has a great deal of support, we believe, at the 121.20 level. We got down there yesterday for just a short period of time. Hasn't done very much. It rallied up to the 121.95 level, so there's not too much happening on that. As far as another question on the grain markets, thank you. I'll try to answer this, is that, we are under some pressure. We're coming in here to the full moon. We might get a bounce, but I think the key date to look at is 2 weeks out when we have the new moon, and we also have the equinox right in the middle of the planting season. Those are the ones that I would like to, really watch with a great deal of interest, because those would be the ones for a longer term where we could really have something big for an extended bull market in these grains if they can in fact hold. And the reason why they always have that potential is, folks, we're only one crop away from famine. We really can't store this stuff. It's got to be used, or it's not very good. So if we do have a famine somewhere in the world, with the crops being really bad, then you're going to see, some explosive prices like we had, 3-4 years ago when we had crop prices and, beans went from $9 to $16. You don't see those very often, but they do occur. Someone's asked a question here this morning about the reaction to the jobs report. Folks, that stuff is just that's just the news from CNBC. They have to, if they're not bad mouthing somebody in politics, they're talking about something that's going to happen with the jobs report. Remember, it's just a forecast. These are not real numbers, and they change them at the end of the month. If you go back and look to see what the forecast was, what they predicted, they're like the weatherman or my show. It's just a question of forecasting, and everybody has an opinion. We know that. So what you want to be able to do is to make sure that you have your own opinion and you use your money to decide whether your opinion is going to be right or not. So that's the key to, watching this stuff. But those are just things that I'm saying. The weakness in these commodity markets means something, folks. It really does. I mean, if this were really boom times in some of these things, we wouldn't have seen copper, sell off 20 cents a pound. Gold wouldn't have dropped $70 an ounce. In fact, it's down. It's down two harmonic numbers. Harmonic number in gold is 35, and we were down $70 last night, and that was one of the reasons I thought it might bottom there at the 1195 level, because it was down exactly 2 harmonics, and so far that's been the bottom. Does that mean it's going to be the bottom? I don't know, because it could go 3 harmonics or 4 harmonics, but at that point I'm willing to take a chance, and I don't have to risk very much at that point if that's the way you want to try to do it. But to do that, you have to be looking at 15-minute charts or half-hour charts to isolate the trading opportunity to a point where you really don't have to risk very much at all. And that's the whole key to speculation, is to try to not risk any more than you absolutely have to. By the way, the word speculation comes from the old Latin word speculare, to deliver, or to observe. I'm sorry, that was on my test when I was in my MBA program. The only question I can remember might have been the only one I got right. I'm not sure. Oh, well, all I know is math was my hardest subject. It took me 4 years to get out of the 3rd grade, but after that, it was smooth sailing. All right, one other question, and that was about the something that I can't answer, and that is about cocoa. I have no idea what's going on with cocoa. My grandma told me if you ever had the urge to trade cocoa or coffee, go lay down on the couch till the urge goes away. So I don't know, too much about it. So there's so many other things to trade these days that, cocoa, and, if I were forced to do it, I probably could, but I'm not forced to do it, so I won't. That's That's how I'm looking at it today as we watch. So there's a potential here in the crude oil and stuff to take a look at it, and you'll be able to see some of these things going, and you'll be able to you'll be able to be okay if you learn that some of these things don't have any. I lost my train of thought. Oh, shut the front door and raise the rent. Okay, no one called in to rescue me today, so I don't have anything else to say. So I guess I'll have to sing the last 10 minutes of the program. When we come back, we want to cover what to look for next week, okay?
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we were talking about these gaps in the Dow Jones Industrial Average. I put those into the Tiger Den here. You can take a look at them. There's 4. We've already filled one. There's 3 left. But there actually supposedly are no gaps on the Dow Jones chart ever. I think there's one from 1975, but the data is a little squirrely, and Twentyman is out of the picture right now. He's visiting his 93-year-old mother, so I have to wait till he gets back to verify it, because Twentyman has perfect data. no one has any better data than Twentyman. So he's a penchant for thing. Let's take a quick look at crude oil, folks. We just made from yesterday's low, we rallied a little over $1.50. We've rallied back to a 61% retracement down here at this 49.11 level. So between 49.11 and 48.90, that 20-point range in there. If you're interested in catching something for a potential bounce, and I do stress potential, that's a low risk because this little pullback could be, something to watch. It's on an hourly chart. If you go back and take a quick look at it, you'll have a pretty good idea that that's all you'd be looking for, and you'd be looking for about $1 rally. So you're risking about 40 pips to make a buck. So that's 2.5 to 1 in your favor. The odds of this trade winning, I would think, would be about 60-40 in your favor. Whether that'll happen or not, I don't know, but that's how you try to quantify what the risk is. Keep an eye on the euro, folks. Above this 106.70, I think it's off to the races. We'll watch it very, very closely, of course, and we've got the full moon coming in here on Sunday, so we'll probably be rocking and rolling just like we were during the new moon last time. So that'll be interesting no matter what. So I think I'm almost finished here for the day, as the old clock on the wall says, and we will get back to you Monday morning and have hopefully some interesting trades to look at and maybe some more information. And all the charts will be updated. And we'll certainly do a review on the commodities because they've been hit really hard this week, everything. Brother.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.